In this video, we're going to discuss the charts within our NinjaTrader workspace. We have 7 of them. They're labeled at the bottom of the screen. Now, we're first going to talk about how to create one from scratch. We first hit the plus sign here at the bottom, go into Instrument, make a selection. Then you have your properties here. This will give you the type of bar that you want to select, the interval, that is to say, or we're just going to use minute bars here at the moment. 5-minute bar, this can be changed once we get things started. The amount of data that you want loaded, in this case days. 2 days will be loaded with the end date on the 14th, and then the type or style of bar can be selected here. We hit OK. Now we have our bars, and now we can begin to add indicators. To add indicators, you right-click on the screen, go into Indicators. This could also be found using a hotkey, Control-I believe it is, for indicators. And now you've got all your indicators up here. The ones that we're mostly concerned with are the order flow indicators. So let's talk about the order flow volume profile. Now, to add it into the chart, you have to go down here and hit Add. Once you do, now your properties will show up. What we use primarily is a profile type, volume, and a display mode known as heat. There are other options here, so you may want to play around with that to see how things change. All right. Then probably the next most important decision to make is the resolution, whether you're going to use tick bars or whether you're going to use minute bars. Now, depending upon how much data you want added, if you're adding reams of data, going back weeks and weeks, you don't want to use tick bars. It won't make that much difference, and it'll take you forever to load it. So use minute bars if you're using large quantities of data. Tick bars for shorter periods of time. 10 days, you can use tick bars without too much trouble. Then the rest of this will determine how it displays on the screen. For example, the left profile alignment will mean then that the profile will start on the left. Okay, it's going to start on the left. This determines the width, the opacity, the value area if you want it, which frankly, it doesn't matter to me that we have a value area on any of our profiles, because I really want to see everything. It's all relevant to me. Make sure that's checked as visible. Now, once you have this set up the way you want it, and by the way, down here, a little bit further down, you can style this however you want. And I'm not going to go through this with you, but the most important thing is to get it on the screen and make the appropriate selection. You hit Apply, and that's what you're going to wind up with. So you have to make the determination as to how you want this thing displayed. As you will see, I don't use this type of display. It's just one of many, but that's how you get it on the screen. Again, you go to Indicators, go into the Order Flow selection, add it on the screen, and then make the adjustments in the properties on the right. Now let's look at what we've done. Now, we have several profiles on each chart. We have an order flow profile that is based upon the visible data, what's visible on the screen. So when you go in here to indicators and you look at what we've placed on the screen, you see one of these is based on a composite of 3 days back. And by the way, the minimum number of days back to set up this type of composite market profile is 3 days. You can put 1 day in, but you're going to get 3. You'll wind up with 3. You can't get anything less than 3 days using a composite. Now, once you go to 4 days, you'll notice a difference between what a 3-day composite and a 4-day composite looks like. But your minimum is 3. The other volume profile is a visible screen range. It's still a composite, but it's the visible screen range. So let's talk about that. The one on the left is the visible screen range, meaning that depending on how much data is on the screen, it will change what the profile looks like. Okay. Then the composite profile that's using 3 days, I've set it up to be placed in this position. And to the right of this will be your market depth, which you will only see if you have live data streaming. And since this is a weekend, nothing is showing up. Because it is a 3-day profile, you'll always have historical data on this chart. So if you wanted to see only what was happening based on what's on your chart, you need to use the visible screen range. And of course, you can vary how much that data is by sliding to the left or to the right. Okay. Now, let's talk about this a bit further. We've also placed on the screen the VWAP, as well as standard deviations above and below the VWAP. That's set up right in here, okay? Order flow, VWAP, and then the number of standard deviation bands. You can select here, the maximum is 3, and you can style this according to however you want it to display. So whenever you have a market profile, you're also going to have a point of control, and the yellow line is the point of control. Here on the visible screen range, it will vary based on the amount of data. Okay. But the POC, based on 3 days, as you can see, is way down here. Now, below all of this, we put the order flow cumulative delta. And this just displays as a bar. Okay. So now it's a question of how much data do you want to show up on the screen? If I shrink this as much as possible, all right, using a 500 tick bar approach, I'm going to go back to the beginning of the day. If I use a shorter amount of data, like 200, and by the way, this is mislabeled, that's not a volume bar. I didn't notice that until just now. Okay, that's how you change that. Okay, 200 tick bars. Okay, you got even less. So if you want more data to show up, you've got to use a larger range. So for example, this chart is identical to the 500 tick bar. The only difference is it's 200 ticks. This next one, again, is very similar, but it's a 5-minute bar. Or, pardon me, 15-minute bar. That's what's on the screen now. And I will change this from time to time based on what it is I'm trying to see. I've labeled this as 5-minute, and I just go up here and I change it to whatever I want. Now I've placed in panel 2 a 0 line so I can see where the cumulative delta is relative to the 0 bar. Or pardon me, the 0 line. Okay, so as you can see, the visible screen range is still being used here. And the visible screen range has to be drawn relative to the amount of data that you've got on the screen. Now, as you can see, I've only got a few days of data. I've set this up for 10 days of data. So if I want to modify this, I'm going to right click on or left click on the bars themselves, then right click on the mouse, go to properties. And okay, as it turned out here, I must have adjusted this, but the visible screen range is based upon how many days you have loaded. You can't get a visible screen range beyond the number of days loaded. So in this case, 20 days. If I change that to 10 days, notice how the visible screen will profile will change. It's got to load it. It's calculating. Okay. So now it shows up a little bit differently. We go back in here to indicators, and again, for the visible screen range, it's just set up here. You don't have an option of setting really the amount of data is not available under properties here. That has to be a function of the number of days back that you have on the data itself. Then you just set it up to visible screen range, and then it'll show you either more or less, but no more than the total amount of data. So again, if I spread this out, you know, how the profile will show up is all based upon the visible screen. So that means that it's only going as high as what is on the screen at the moment and as low as what's on the screen at the moment and the corresponding profile in between. Okay. Now, I've got another chart here. I just labeled it as A because the only thing I really want to see is the cumulative delta. So it doesn't matter what I named it. But you can't have just the cumulative delta alone. It won't show up unless you have data. Okay. So all I did is I put the data on the screen, added the cumulative delta, and then minimize that panel. Okay. And then if you want to change the size of the bar, again, hit that, right click, go to properties, and change the bar width. Right there. That's set at 12, set at 1. Okay. Over here. Now what we've got here is 12 months, basically 1 year worth of data. I want to know where we're at, given the total amount of data that I'm, concerned about looking at. Right? So now, okay, what I just did is I moved to the right, all right? And you see how this is now not centered? Over here, upper right is a letter F. If you click on that, it centers the data on the screen. Now, depending upon the kind of mouse that you have, you can either move that data up or down, as I'm doing now. But if it goes, for whatever reason, let's say it just disappears from the screen, I go back here, I hit F, it'll recenter it. And the same applies in subpanel 2. Now you don't see it here right now. Let me pull this over here and you will. Come on. All right. There is a way to do that. It's for some reason it's not showing up right now, but you will have an F in here. Ah, there it is. Okay. You hit F and it rescales the data in panel 2 as well. Okay. Now there's, of course, other things that you can place on your screen if you want. I've added on this screen the prior day open, high, low, close data. But I have that on TradeStation as well. So it's not really that important to me on this screen. But the whole point of the matter is, at times you need to be able to look at where is this market going in relation to the overall picture. And that overall picture is subjective. I've elected a full year of data. You could go 2 years, but it's not going to change much if the market hasn't gone within that within the profile. So for example, as I squeeze this down, you can see that at some point in time, this market was way down here at 5,200. I continue to move this down, and we see that our 12 months worth of data has a POC down at 47.56. We are way, way beyond that. Okay. Now I'm just pulling it up. So now I see the full range of 1 year's worth of data on the screen. We got all these low volume nodes and some higher volume nodes as well. We got a lot of room to move down and not a whole lot of room. Well, we've got plenty of room to move up, but as you can see, we've got low volume areas way below where the market is. This market will retrace. Okay, so that's 5 minute, 12 months of data. Here's another composite. This is a daily bar, essentially. I'm using 240 minutes, which effectively is 1 day of data. Let's recenter that, hit the F. And this goes back to a specific date of December of 2019. All right, so how do we set that up? Let's go into indicators, volume profile, and here the start date. Okay, I'm using a start date, so I change this, change that, and now I've got all of the data from December 2019 to date using a 240-minute approach. Now you could change that to a daily approach if you wanted. doesn't really matter that much. But that's what you've got here. So again, that gives me a way for me to get the big picture. You know, let's just see what's been happening over the course of time. That will allow me to have some concept of where this market could go if we really start to plummet. And I think we can all agree that day is coming. Finally, occasionally consult the daily chart. Hit the F. Oops. Okay, what happened here? I hit the F and it rescaled this. Now, I'm not really sure why that happened, but let's fix it. So let's first of all go to the data series. All right. Daily. All right, so what we did here is we used a start date going back to 2021 all the way to our current date. Right, I don't see anything here that suggests to me. Okay, let's put that in there. Here we go. Okay. Now we got it back. So once again, we've got two different volume profiles. One is the composite. This is set to 1. It should be set to 3 because you can't get 1 day. But the other volume profile is the visible screen range. And the amount of data in this case would take us all the way back there if I wanted to see it. Okay. So let's go ahead and get that recalculated. So this will allow me to go all the way back there and get that profile using the visible screen range approach. So this is a little faster for me to get an idea of how the market is or where the volume areas are without having to go back and adjust the individual settings. Okay, so that's why that's there. All right, so let's now talk briefly about how do we use this. Now, it's going to take time to get skilled with this, but when you do, you will be able to go to a screen and have a pretty good idea of where the market's going to go, how the market's going to move, where it's going to go, and even where it's going to pivot. Now, your 3-day profile is real valuable. Now, the profile adjusts through the course of the day because it's adding the data that's coming in for today. So when you're seeing this profile, it will change in the course of the day. Once it has, I can't go back and revisit this and say, well, this is what I would have done, you know, based on how that profile looks. It's not going to look this way in real time. So if I'm going to go and practice, I really have to practice with the visible screen range. And that, of course, will depend on how much data you want and what interval you want to have this at. But let's just take a look at the general idea. Now, the volume profile, as you can see, both on the visible screen range and the composite here, has what we call a heat zone. The heat zone is the area of red versus yellow. I've elected to use these colors, you can change them. But the heat zone is where the bulk of the trading goes on. And during the course of the day, that heat zone is going to change. So one thing to keep in mind is that as the market moves beyond the heat zone will act as a magnet, pulling the market back to where the value is. And the value is where the market has previously been. That's why we call it a market profile. The value area is your heat zone. So that's where the market has spent the majority of its time. So forget about what's visible on the screen. Be aware of where that heat zone is. So watch the market as it moves. Now, again, I can't show you this profile as if it was in real time because it's not. This is now what's happened over the past 3 days. So what can we say about what's coming up? All right, so this is the close. So what can we say? Come Monday morning, where's this market going to move to? In what direction is it likely going to move? It's going to likely be moving in the direction of this heat zone. It's going to be coming down. Now, once it does, depending on what amount of volume it left behind, what kind of a pattern it left, it's going to gravitate back toward that. And you see on this chart, you've basically got 3 pretty good sized heat zones. One down here, one little one over here, and another slightly larger one over here. With the majority of the volume in between this little area. So as I said, how can you use this? Well, one very, very safe way to trade is just wait until it gets to the heat zone. And then just trade your indicator within the heat zone itself. So for example, let's go back to when the market was in this area. All right. Now, granted, this is the overnight activity, but you can see that if this would have been a typical day on your TradeStation charts, you've got your RSX, your CCX, and because you're in the heat zone, in this case, all you want to do is just follow the indicator. Follow a 500 tick bar, RSX or CCX, and don't trade against the indicator. You're in the heat zone. All right, you should never trade against the indicator, but because you're in the heat zone, as it's going up and as it's going down, you can swing trade that. Now, once it gets beyond the heat zone, well, now, maybe you don't want to trade that. But you've got plenty of very high probability successful trades right within the heat zone. Just follow the indicator. You ain't going to go wrong. Don't trade against the indicator. And you really don't need to worry about the so-called trend because you're in the heat zone. It's going to be moving between the lower end and the upper end of the heat zone. So just trade the indicator. Very high probability. Now, let's see where we start getting into this area of the heat zone. Oh, okay, I'm going to stick with that. So now we're in the heat zone. You might be inclined to say, well, now wait a minute, we're way overbought. We've made this big move up. Not so fast. Sometimes, yes. the market will ricochet off the lower end of the heat zone as it moved up in that direction. Now, again, this is historical, so you can't really, all I can say is that let's just assume for the moment that this is live data. And I want to go, and you see how it moved? Okay, it bounced off of that heat zone. And it moved down. Where does it move down to? The lower end here, there's again, you can't use this, and I'm so inclined to want to say that while we're talking about it. What we've got to use is over here, right? On the visible screen range. So let's go back here. We're moving up, and so this is real. On the left side here, visible screen range, that's real. It can't see to the right. It doesn't know that. So we're at the upper end of the profile. And as we move up, if we're getting overbought and it begins to retrace, it will retrace down to the low volume nodes. And that low volume node is right there. See, low volume here, low volume there, and another bigger low volume area right in here. It will retrace down to these areas. So as you watch your indicator, and we're not going to talk about cumulative delta just yet, so I'm going to move this out of the way. Heat zone. We're moving up, we're starting to move down. And as we do, okay, here's your first little low volume node down at 50, 6, 60, 50. Okay, now it's gone beyond that. If it continues to move down, it's going to move down to 56.75. Now, I don't know that it's going to do that right now. I just know that it will. Okay. Boom. Now, when it got there, there was still areas of lower volume just slightly below that, all the way down to here. We don't know how far that's going to move. But this is a big target. Now, as it moves back up, all right, where's it going to move? If it comes down here, where's it going to move back up to? The area of low volume is up here until we get to 58.25, which is the next area where the heat zone has more volume. And if it gets past here, it's going to move all the way up to the top of this little area of higher volume, and it may stall right back there, where we didn't have much volume in the past. There's no value there. Now, there is. This is not particularly low volume, but that's the way you've got to consider it. Where is the value? If we've got no volume down here, there's been no value at that price. So it uses that as somewhat of a boundary until it gets there, and then we find out, well, what's the response once we do. So let's watch that. It's going to move back up. So where's it going to move? It's already moved into this zone right in there where my cursor on the left is. Then it's going to move higher because we've had value, but not as much over here. So you see how that moved up right to that spot and stalled. That is cool. To have that kind of data and to watch how the market behaves is phenomenal. So you watch your indicators, you look at these areas, And you can anticipate what's going to happen when you get there. So you watch your indicators to see if you're overbought or oversold on the indicator. And if you're at one of these areas of lower volume, you know pretty much that your indicator is going to turn. There's been no previous activity there, right? Now, it stalled there, but there was higher volume up here. So as it moves through here, now it's going to consider, possibly petering out as it goes into this area where previous to this, we've had very little volume. So it may go up there and test that. Now, it may go higher. And that's when you're going to be using other data tools like your Fibonacci extensions to find out what has been the historical activity above an area where you've never been before. But that's, in today's day and age, that's really only going to happen if you're going into new highs, because we got plenty of data coming back down. All right, let's take a look here at what happens. All right, now we're building a profile, as you can see here. But as this moved up, what did it leave behind? It left behind an area of low volume right there at 64.25. An area of lower volume. That's got to be tested. There it is. Okay. Now, notice how that area of low volume changed. Watch the left side of my screen. There's your area of low volume. It comes down, hits it, fills it in. Now there's a little bit more of a lower volume area below that. It drops. And then there's another area of lower volume where it's at right now. It may try to fill that in. And if it does, and if the trend is down, and you won't be able to tell that from what's on the screen right here because you don't have your market depth. But if you had the market depth, we'd be able to see how many contracts are sitting down there at that particular price. And I'm talking about right here, 61.25. I know from this that that's an area of low volume. But as we've gone down to this point, we've got higher volume up here. There's more value above where the market is than there is below. Be that as it may come down here to test that as a limit to the range of motion below where the market is. Let's see what happens. Okay, it didn't. It turned and went right back up to the area of higher volume above here. Okay. But we've still got this area of low volume right there. It left a footprint and another area of low volume here, and even much lower down here. So now, sooner or later, this market's going to turn. It's going to come back down to 55.25. It will do that. I can't tell you exactly when, but it's not going to let that sit. Okay, I'm going to draw a line just so you see it there. I'm going to leave a draw an F2 line right there. It's not the line that I wanted. Sorry. F6 line. There we go. Not an F2 line. Okay. All right, she really took off. Wow, 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 wow. really took off. All right, let's just do it this way. All right, didn't come all the way down as of yet, but it will. You can see that. Now, in any event, on the way up, okay, okay, let's go back here. And all this big move up, we got all this area of low volume in here. It's hard to say exactly where it's going to stop because there's so much of it. But it doesn't get filled until it moves down into this area at around 5670. So all of this low volume area, if this thing begins to retrace, it's going to go down there. And where it's liable to stop is where it starts to find value from the previous activity, which has happened right in here. So as it's moving down, what you want to do is look at where it's got to go. The first place it's got to go is there, right there. That's low volume, right in there. Oops. Didn't want to use that. Okay, I'm just going to use what we've got. So that's your first target. You're up here, you got this area of low volume, it's moving down there. Okay, once it has, see how it fills, and it didn't fill that very much. It kept going. So where's the next area of low volume? It's right there. But there's lower volume below that. So what it's really going to do, it's going to move down there. Okay, once it gets there, the next area of low volume is just below, and then another one right below that. Now it's a matter of watch your indicators. Are you getting oversold? Boom, moves back up, says didn't want to go there. That's as far as she moved on that particular move down. So once it's got there, you've got to now look back up. Well, where's the area of low volume again? This area of low volume is still there. It's going to want to go up there. And if it continues to move higher, it is going to move all the way up to the top of the heat zone. And there's not it's not a huge heat zone as of yet, but that's your previous high. It's going to go right back up there. So let's go back down here. Let's put it in our line. Again, 56, 80, 75 is the target. Boom, hit it. See what it does. Okay, now it starts to fill that in. All right, now it's filled it in reasonably well. And what has it done? It's left. I'm going to expand this out. Okay, right in there. Could very easily come back down, test that. And then, again, you watch your indicators, see if it's going to go lower. See what happens. And it does. Now, where is it going to stop? Well, you got low volume in here. And if it breaks through here, then it's going to start messing around in here. Okay. See this shelf there? Sometimes it won't go much past that. But you've got lower volume right down there at 69.75. It didn't want to go there, not on that move. So here again, There's the shelf. Didn't go much beyond it. Left this area of low volume, didn't like that. Couldn't find any value down there. Moves back up. Where's it gonna go? If it's moving back up, your target is this area of low volume right there. Okay. Then you got another area of lower volume right there. It's amazing. Now, this moved up. You got low volume there. You got low volume there. This is so close, it's hard to say whether it would stop here or go all the way back down. Again, you watch your indicators. But there's a bigger area of low volume in here. So I would tend to think that it's going to go there. If it retraces, yeah, goes right down, and then back up. Get the idea? This thing, these profiles are profoundly accurate. Take a while. It's going to take a long while before you really learn how to use it. But once you do, I tell you, it's amazing. All right. Up here, volume, low volume there. That's at, what is that? 81, roughly. And then another area at 82.50, another area at 85. And then, once it gets done futzing around there, it's going to go up there and test the high. Lot of volume now in here. But what's it leaving behind? Areas of low volume. Now, let's go and move this forward. So this keeps right on going up and up and up and up. And as it does, what's it leaving behind? Low volume. All of this is going to get tested. This thing is going to short because you got too many areas of low volume. In other words, the rally was on low volume and it will short. Not to mention the fact that we're hitting all-time highs, but we didn't hit these all-time highs on high volume. We hit it on low volume. So this will turn, and when it turns, it's not going to turn a little bit, it's going to turn a lot. Now let's just like this. See that? And when it came down, notice the bounce right at the POC. POC's been sitting there. What does it do? It comes right down to the POC and it bounces. When it bounced, where's it going? Okay. As it came down here, it left these areas of low volume there at 91.75 and again up there at 95.75. 91.75, 95.75. Didn't make it. Made it all, yeah, didn't even make it into that area. So it didn't want to go there. It wanted to come back down. And if it comes back down and it breaks through the POC, where's it going to go? It's got to go to 85. But more likely it's going to go down here where this big area of low volume is. And I shouldn't say it's a big area. It's a price point that had very little volume compared to the price activity above and below it. That will be tested. The next thing that will be tested is right there at 75.50-ish. And then below that, now we're gonna get down into this area of around 69.75. Okay, watch. Boom. Okay. So yeah, you really gotta study this. And now what we're gonna do is we're going to add the cumulative delta into the equation to show you how useful this data is. And this is really cool. Now, there's several tools that you can place on your cumulative delta. And the one that I think is probably more useful than the other is just a simple trend line. A simple trend line. So what you want to do when you draw a trend line, point A is the most important. So let's just expand this out as much as we can. Okay. Now, if you're using, this is a 500 tick bar, so using a minute bar is fine, which is partly why I have this in a separate chart. Because if I want to find point A on my trend line, it's so much easier to find it. But here's what you need to do. To find point A, on your trend line, you've got to have a starting point. And in this case, if I'm going to be drawing a trend line from the low, right there, how do I know what that is? You use your data box. You bring up your data box by hitting Control D as in dog. When that happens, this box will appear somewhere on your screen. Now, when I line it up, there you see your time, your price of the ES, but under the price line is the order flow cumulative delta. And what I am only concerned with is the high and the low. In this case, I'm concerned with the low. It's at negative 40.34. That's my point A. So when I draw my line, and I'm going to use F2 as my hotkey for drawing this. Okay, I just hit my F2 key, and now I've got my point A, but I'm not sure that it's necessarily right on the money. So I'm going to right click on the line again. Pardon me, I'm left clicking on the line. Then I'm going to right click on it so I can bring up properties. And then I'm going to reset this number according to what my data windows show me. Negative 40.24. Negative. Sometimes the negative key on my keyboard doesn't work so well, but that's going to be 24. Okay. Oh, I'm sorry, it was 34. Pardon me, I thought it was 24. Go back, correct that. And I'll move this so I can see it. I've got 4 screens, so I can move it anywhere I want and still be able to see it. Okay, negative 40.34. Right click, left click on the bar, and right click on properties, 40.34. Oop, it went to a positive instead of a negative number. And it does that on my keyboard. All righty, now we got it. Okay, so point A is very important. So now what I'm going to do, I'm going to look for a retracement and I'm going to draw my trend line. So now, depending on how you want to use this, one way that you could do it is that you could draw it here. That's my point B, and I use the end to just sort of line that up. I have to eyeball it because I can't very successfully line it up exactly. I just want to eyeball it. So it might look like this. Okay. Once I've got this point, I might draw it again. Another way to draw it, though, would have been to just follow the lows. All right, which doesn't line up real well. But I can tell you that once you break that trend line, the market's going to move. It's going to act just like one of your indicators. So I could have tried that or this, or I could have used point A right in here because I've had a lot of movement right along these lows. And I can say, okay, that looks pretty good. I would line that up exactly. I would use my data box, the data box for that. Then I'd line it up, I'd draw my line. And I would say to myself, okay, all right, let's get out up here. Let's look for another opportunity to get in. And one of the ways that I could do that, just with the trend line, is to go up here, find that high point, and this high point, and say, yeah, okay, I'm pretty safe to go long once we're in here. And then once that gets to moving, I can draw my trend line again. Once you break the trend line, redraw it. All right. Okay. And that's working pretty well. So I'm going to stretch that out and say, all right, if this moves too much beyond, okay, I'm going to forget that line and I'm going to redraw it. And I'm going to move it over to here, redraw it, kind of like that. I like that. So I'm going to feel pretty safe as we're moving up. That if we retrace back down to this line, I'm not worried about getting out. That's just a little bit of a pullback, just like my oscillators will show me. And my oscillators will be right on the money with all of this. But there's no reason to go against that trend. Now let's take it a little further. So I'm drawing my line, and things are working pretty well. Okay, so this market just rallied and rallied and rallied all day long, and then finally broke the lines, came down. So one easy way, use a trend line. Now, there's some other things about the delta that you need to know. At least this is the way I use it. Now, forgetting the trend line for a moment. Let's go up here to this first high. Higher high here, higher high here. Higher high here, lower high here. Higher high here, higher high there. So you notice that this new area of highs was accompanied by lower highs on the volume. So that's bearish. It's liable to pull back. Doesn't necessarily mean the trend will change, but we're liable to get a pullback. And we do. It's not much, but we do. Now, as we get into a new high here and another new high here, volume is in agreement. We get into a slightly newer high here, just ever so slight, but a more pronounced higher high here. In other words, if you compare this price, okay, this price right here, to our prices right in here, it's just barely about quarter of a point. Then it happens again here. We've got a high at 88.25 here and another high at 88.50 there, okay? But you've got higher volume. Now, as we get into these highs right in here, this is where I want to draw your attention. The volume on that bar, according to the delta, the last four digits were 147. Now we're at 554. We have more volume here than we have over here, but we're at a lower high. That's bearish. Think of it this way. If I put a stochastic on the volume, what would the stochastic be doing right in here? It would be overbought. When you get an overbought read on the volume, or oversold for that matter, look for the divergence with the price activity, and you won't go wrong. Okay? Now, we come down here, hit a new low, goes lower. Got a lower low on the ES, and we got a slightly lower low on the volume. Not much, but a little bit. And then we get the volume begins to go positive again. But all this did is it just slammed right into the trend line. Okay, whoops. Right about there, right about there. Okay, just slammed into the trend line. No reason not to go on. Now let's look for another example here. As this thing is moving up, I don't really care how this volume is behaving, because we don't have anything to compare it with until we get up here. So in any case, though, as we are moving up, our volume is going higher. Now, don't think that this means we're overbought on the volume. We had to now review this from the point of its retracement and not pay too much attention to where it was. That's the way I look at it. But we've got very, very nice positive volume continuing to move up. And that's all I care about. Now we finally get higher here, we're higher here. As far as I'm concerned, that's just in agreement. Now we get into here, all right? We're still in agreement on the volume. There's nothing that's really changed here, except for the trend line. Now, I'm going to redraw my trend line. Watch very carefully what happens. Get this out of the way. I'm going to draw a new trend line from right in there. And I'm going to hug those lows, particularly right in here. Okay. Now, as you see our move up here, the volume has dropped below the trend line, and the highs of the volume are below the trend line. That's very bearish. the bears. Shouldn't be happening. So we're below that trend line. This thing is liable to short. In fact, it's most likely going to short. When you see this happen, okay, we're not hitting any new highs in here. We're hitting lower highs, and the volume is below that trend line. Now, you could draw another trend line, all right, at these lows. Okay, let's just draw another one. Yeah, something like that. And that would have, well, I don't have that real well drawn. That's not quite right. But you can see if I use this as the low, I've dropped below this trend line again. So I've dropped below it here. I'm not getting new highs here. I've dropped below it again. This thing is going to drop. And you can see that's exactly what it does. So now what do? I could redraw a trend line from these highs, and you can see where that gets broken, but we're at the close of the day, so it's kind of meaningless. So I'm using my trend lines. Trend lines on the delta, very, very powerful. When you get to draw on this, you're going to say, wow. And it really works. Can you draw a trend line on the ES? Of course you can, but this is like independent data. When you're drawing it on the price action alone, you've got nothing that's really confirming it. That's why we use the premium. That's why we use the Tikkie. Here, the volume is independent of all this, of the price action itself, and it gives you further confidence, further evidence for what you anticipate the market's going to do. Okay, now one last tool, and I love this, are your Fibonacci retracements and your Fibonacci extensions. Now I'm going to get rid of this. I'm going to right click on the screen. I'm going to go to properties, and I can now delete these lines if I want. Okay, now they're gone. I'm going to go back to a different day because this is somewhat uneventful. It was so straight up. But I tell you what, no, let's just use this for a minute. I'm going to use a Fibonacci extension off of point A, point B, and point C. Barely see it. All right, so what I do when I'm writing my extensions, I bring up a notepad and my delta, and I'm going to write down these numbers. All right, so I'm going to pick point A, negative 40.34. Okay, I'll write that down, negative 40.34. Then I'm going to write down point B, which is right up here. The high here, negative 1887. Then point C is right there, negative 2976. Then my F9 key is the Fibonacci extensions. So I'm going to draw that, and you can see what happened. right? Now, I would go in and then once I've drawn it, I'll go back in and I will right click, I'll go to properties, and then I'll get those numbers exactly the way they should be. Negative, negative, please. 4034. $18.87 and $29.76. Now it's exact. And what I find very interesting is where it tends to pivot. And it tends to pivot around the whole numbers like 200, 300, 400, 500, 600%. Or the big numbers, your Fibonacci is at 61.8. As you see here, we got a pretty good move up above 400, almost to the 38.2, and then she retraced. Then and when it does this, I'm generally going to redraw the extensions, but just leaving it alone, I just find it really kind of interesting. It goes up to the 500% line and retraces down to the 400, all the way up to the 661 before it retraced again. And because I've done this, this is already built into your workspace. So when you bring up a Fibonacci extension, it's going to look just like this. You don't have to add all those numbers. It took quite a while. So that's how you draw it. The problem with the Fibonacci is that regardless of how it's drawn, you really don't know where it's going to change direction. But it is pretty interesting that when it does change direction, it tends to do it at the Fibonacci numbers. I mean, why is it that given how I drew this, we moved right up to the 561.8 and bounced off that? Why? I don't know. Oh, maybe it's because it was a Fibonacci number. Don't know. You can draw the Fibonacci extensions along with the trend lines and have a pretty good idea of how the market's going to behave. Now, like I said, I'll usually redraw this once we get this kind of a movement. Where am I going to redraw this from? Probably going to use point A, point B, point C. Let's try that. Point A there is at 1942. B is up here at, looks like about 61.87. Yeah. And C is down there at 44.28. Okay. Right click on this. I can see that if I go to hit properties, I'm not going to get the Fibonacci. So to remove your drawing tools, go up here to drawing tools and go down to remove all drawing tools. When you hit that, it'll remove everything. Okay. So I'm going to go back, hit F9. I have to draw it first and then I'll correct the numbers. Right click and properties, didn't work this time. Yeah, still not. So if you're having a hard time bringing it up, go back to drawing tools, then go to drawing objects, and it'll have it in here. 1942, 61.87, 44.8. Thank you. Oh, look at that. Is that pretty or what? Ran up here to the 500, retraced exactly down to the 361.8, moved exactly up to the 661.8. Exactly. Wow. That's something else. Okay, now you know all of my secrets. So hopefully this will give you something to work with and will be useful in your decision-making process about when to enter and exit your trades. That's the extent of this video, and it is the weekend, and I'm still gotta spend some time having some fun. So that's it for this video, and have a good day.